Michael Burry just revealed his biggest move in the first quarter of 2025, shorting 900,000 shares of Nvidia stock through put options. That's nearly half of his entire portfolio, betting on one of the largest companies in the US stock market to go down. Just for some context, this is a stock that makes up 6.5% of the S&P 500 and has been one of the largest upwards forces pushing the US stock market over the last 2 years. And just over the last month, Nvidia has rallied by 20%. So is Michael Burry once again seeing something that others are not? Well, zooming out, Nvidia is still one of the most explosive stories in the stock market. Up 960% from January of 2023 till its peak in January of 2025. But earlier this year, Nvidia began to drop due to a couple of big fears. First of all, concerns over DeepSeek, a new large language model claiming superior performance, all while having lower costs and not requiring Nvidia's chips. And secondly, the US export ban on Nvidia's main AI chips to China. Both of these concerns made the stock fall by over 40%, and although Nvidia has recovered most of its losses from these shocks, these still remain very real stories that could impact Nvidia's sales trajectory and perhaps pull the stock price lower, which could explain Michael Burry's timing. And that begs to ask the question whether we should be considering to follow Michael Burry's footsteps on the Nvidia short trade. Quick reminder, this is your last chance to take advantage of the 30% discount that we're doing on our service at bravosresearch.com. Now let's dive into the facts and data on Nvidia. These lines right here show the comparison between Nvidia's sales with total capital expenditures from the 3 largest cloud service providers, so that is Amazon, Google, and Microsoft. As we can see, the correlation is crystal clear. The capital expenditures of cloud service providers has been one of the main drivers of Nvidia's sales and has been the primary driving force behind the 941% increase in Nvidia's earnings over the course of the last 2 years. All of this earnings growth is coming from a handful of tech giants that are allocating massive budgets towards AI infrastructure, translating into strong demand for Nvidia's data center products, which are essential for AI training. So it's understandable why some investors fear that if AI progress no longer requires larger models and more computing power, as DeepSeek might suggest, that could threaten Nvidia's earnings. Now, we believe this concern is overblown. Contrary to market fears, AI-related capital expenditures remains at record highs to this day despite DeepSeek. Cloud service providers are not backing off from their spending in 2025. Amazon, Microsoft, and Alphabet plan to deploy $100 billion, $80 billion, and $75 billion respectively, primarily focusing on AI and cloud infrastructures. And the Wall Street consensus of about 50 analysts expects AI capital expenditure growth to continue through 2028. So if DeepSeek's impact on capital expenditure isn't a real concern, what about the export ban of Nvidia's chips to China? After all, China does account for 12% of Nvidia's revenue, and the latest US export restrictions could result in $15 billion in lost sales, plus a $5.5 billion inventory charge. So this isn't just a geopolitical headline, it's a real revenue hit to Nvidia. But it's not the first time that Nvidia has experienced something like this. Back in October of 2023, the US also issued a similar ban on one of Nvidia's main chips, but the company simply responded by developing a scaled-down, compliant chip for the Chinese market, a move that did cushion the blow and helped the stock recover. Fast forward to today, and Nvidia is doing the exact same thing once again. CEO Jensen Huang just confirmed a newly modified chip for China that will be getting distributed in the upcoming quarter. When we compare Nvidia's stock price action today to the one in October of 2023, we could argue that it looks quite similar. The stock really just consolidated for a few months before resuming its rally driven by strong earnings growth. It's very possible that the stock is in the midst of something like that today. The company recently announced that it will supply several 100,000 of its most advanced chips to Humane, an AI startup owned by Saudi Arabia's Kingdom Investment Fund. This billion-dollar deal could help Nvidia completely counterbalance the impact of the product export ban to China. With AI data center spending projected to reach $1 trillion by 2029, we've been very bullish on the semiconductor sector at Bravos Research, comparing this new and growing industry to the software industry in the early 2000s. And Nvidia is still very well positioned to take advantage of this long-term structural trend. So then why is the legendary investor Michael Burry making the exact opposite prediction and actually betting against Nvidia? Well, before we jump to conclusions, we should remember that the 13F filings that reveal Michael Burry's positions on a quarterly basis are slightly lagged. The 13F filing confirmed that Michael Burry held a short position on Nvidia as of the 31st of March 2025, but it doesn't tell us if he is still holding that position to this very day. This right here is where Nvidia was on the 31st of March. This was right before Donald Trump announced his new tariffs, which did trigger an additional 15% decline on Nvidia in just the week that followed. It's entirely possible that Michael Burry was able to sell his short position on Nvidia during the market panic that followed the reciprocal tariff announcement on Liberation Day. In fact, it's even possible that Michael Burry eventually even bought the dip on Nvidia during the panic and is actually positioned long on the stock today. The truth is, we simply do not know. The 13F filings unfortunately do not provide an outlook that is granular enough for us to really understand what Michael Burry is doing with his portfolio today. In order to get that kind of insight, with real-time notifications on trades, granular updates on a professional trading strategy, you can subscribe to our membership at bravosresearch.com. You can see all of our closed trades directly on our website. Again, if you want to have access to all of our trades, make sure not to miss the 30% discount that we're doing on our service. I look forward to seeing you there.